Today, we ended up closing out a $9,000 profit on Nvidia, and I want to share with you guys why I ended up taking the trade and how you guys can replicate this in your trading each and every single day. The strategy that we're going to be using is called the 15-minute open range break, or 15-minute ORB for short. There's going to be a free course in the description. You guys can learn all about this and unusual options flow, because when those two are used together, it is so freaking potent. I posted within our Discord community for our private members today at 9:49 in the morning that we saw unusual flow coming through for Nvidia. And I was saying that I was waiting for 1 minute confirmation, then I was looking to scalp shares. If we look at price at 9:49 in the morning, you're going to see that price broke out and then started pulling its way back. This is 9:48. First thing that we need to do on our chart, and every single morning as soon as the market opens, if I'm day trading, I'm doing this to the tickers that I'm watching. I'm marking off the high of the first 15 minutes of market open. So for instance, today's high would have been 106.61. Then I'm going to mark off the low of that session, 104.41. Now, in most cases, price will trade between these ranges and be range bound for the day. If price breaks below this level, it will usually sell off for the day. And if price breaks above that level, it will normally break out for the day. However, if you understand market structure, which is what we teach here at Traders Helping Traders, is that we know that we're probably going to pull back a little bit lower, because our most recent low that has not been taken out is all the way down here at $103.60. We also know that we don't have to bounce off this 15-minute orb perfectly. A lot of people trade this strategy, and Wall Street knows that they can push price through, jam it back up, stop everyone out, and then move up and then break back out to highs. This is why when I trade, and if you're a part of our team, you know that I really push smaller position sizing, wider stop losses, and more importantly, confirmation of a break before your stop loss hits. So if we just look at structure before we even look at the 15-minute orb, we can take a Fibonacci retracement tool from that low to this high and pull it out. You're going to notice that the golden zone also lines up with this area of 104. So what my plan was to look to enter around this range of like 104 up to 104.50, set a stop loss at a clear break or lower low, and then look to take profit back up at higher high. So at this point, I decided that I was going to take a position, and I was looking to see that golden fib hold. As a couple more minutes go by, we see the BX trender starting to make higher lows. This is a sign in most cases that we're going to continue this move back up and that we're getting money behind it. But one thing happens that I'm not a fan of, and that's price breaks below the 15-minute open range break. It's at this point that I was going to close out my trade, but I said, you know what, I'm going to wait for the clear break of lower low, wait for the short-term downtrend for me to close out my trade. At the same exact time, I saw that MU had a really good setup happening at the same exact point. Now, looking at MU as well, I knew that we had the same exact market structure setting up. Price was pulling back into the golden zone. There was a pretty good chance that we were going to see a bounce off of this optimal trade level of $92. And so as we were selling off, I decided that I was also going to take a long position on MU. And now from a risk standpoint, is this the smartest thing? Not bad, but the fact that both of my trades that I have open for day trading, which are usually bigger positions if I'm trading shares, those semiconductor companies. So I could have not done that, but I really liked both of the setups here, and I thought that the risk versus reward was more than worth taking it, even though it was going to expose me to a little bit more risk. These are some things that we have to think about. You can see that price was still selling off. I'm waiting for a clear break of structure holding underneath that level. Structure does not break. You can see the BX trender makes a higher low. We teach all of this within our free courses. The links are in the description. And you can see that price runs right up, continuing to move its way up until we hit about $93. Now, this is where I decided to take my profit. I should have probably held until we moved up back to $94, but I decided that I was going to take my profit on MU. The reason for that is that if we bring up our market bias, at the time, we were having trouble getting through. So as we started to break out, I took my profit, and of course, I took it way too early. In the case of Nvidia, we did the same exact thing when price started to move its way back up. Normally, we're watching for equal highs, but instead, I thought that it would be smarter to take my profit around this level, because I know that even though there's a chance we can continue to run, that in most cases, there's a good chance that we will pull back into this market bias before continuing to break out. It's very rare that you're just going to see a rocket of a move up. In most cases, price is going to be very uniform. It's going to break out, pull back, break out, pull back, break out, pull back. And honestly, I didn't want to be sitting there day trading this all day. I was just watching for this initial move of 1.5 to 2%, which is all I need in a day. And I was happy to walk away. I hope that sharing this strategy with you guys helped. If you want the full breakdown on it, you can go take the Unusual Options Flow course. It goes over how to read unusual options activity, and there's a whole section in there that also goes over the 15-minute open range strategy. When you take real-time money flow and you implement it with the strategy that we just went over in this, it becomes disgusting in the right hands. So go ahead and check it out. All of the courses are completely free. The link's in the description. I'll see you guys next time.